Good evening, everyone. Welcome to the live FB tonight. And we'll be talking about the subject of the Russian and Ukraine, where it's likely to be going. So we do appreciate if you could share this video in your timeline. We really appreciate your time coming in here. And before we get started, let me just do a couple of things in here and we will start shortly, okay? And thank you for coming, and thank you for your patronage and your time. I'm sure tonight definitely you were able to learn something what we're going to be sharing with you and what are my personal feel about the market. So far it has been on the spot despite what we have said, and I do think we have explained to you since beginning last year November up to now what is likely to be happening in the market in here. So thank you. Okay, do share this video in your timeline as we will be starting very short soon. Okay, thank you. Now, if you have any question that you really want to ask me, just pencil those in there, and I'm happy to really answer you and give you my opinion, what I think of the market. So far we've been right in most cases, and I do hope that you have enjoyed the benefits, some of the information that we shared here that has helped your portfolio so far. And if it's not, do let us know how we can be much appreciated. But all in all, we rely a lot on what is presented and also looking at our past track record and also looking at our history using the Pentagon Guider and many of our analytic tools. So tonight you'll be seeing some of the tools that we showcase and what will be things that likely to move in your favor in here. So thank you for really coming tonight in here. We shall start in a minute of two. So we do hope that you all sit down, enjoy yourself. There's a question here, any difference to trade stocks versus options? My opinion with options are more difficult because of the expiration date. If you have never traded options, try to stick to stocks first, okay? Option is a different ground altogether, and usually I prefer to stick to stocks because people who traded options generally don't have enough capital. That's why they're trying to leverage on it, and there are many ways option can go against you. But if you are comfortable with options and you have someone to guide you, definitely can go on to the option here. Don't be so attracted by the so-called returns that they have seen before just because it's a small capital. In Malaysia, we use structured products in here, can also give you the kind of same return in here. All right. Okay, great. Let's get started right now. Okay. Welcome to our evening talk. Right now it's 9:30 in here, and tonight we'll be discussing about what I feel personally using all the tools that we have seen about the US market and also the KLSE outlook after the Russian and Ukraine war ended. Now I'm playing on to a scenario, what is likely to happen if the war should end, and this is generally my personal opinion. I may be wrong, I may be right, but if I'm right, I do think that many of you would have benefited from some of my outlook that I've given to you, and also do a kind of projection that we're going in here. So this is usually my opinion, seeing where the market is. Of course, all this generally are my disclaimer in here. Some of this I have already positioned that I'll talk about in here. But before we start, don't forget to subscribe to our YouTube channel on Trade VSA for really new format, new content that will be rolling out to you in here tonight in here. Now, so far, you see a picture of a sailing boat. How has it been for you in the bull market, at least since November, right? Since we hit the new November last year, 2021, we had a new high. How was it so far? Was it smooth sailing for you in the stock market? Or likely, where are we heading should this war end? And that's one of the questions I try to attempt to answer. But I want to ask the audience who is listening in tonight in here, where do you think that the market is likely to be heading, or you just don't have a clue? But so let me just try to explain the so-called the mystery of the market to you in here. And also, is the war getting worse by the day as we continue to put our fixation and our attention to the CNN, to the Reuters and the BBC? How has it been? Is it getting worse in here, right? And of course, if you are listening right now, the Ukraine are taking some of the territory back. That could also mean that this war can even last longer. But let's take a look at what we have and have some sort of assumption, where we are heading up, and if we do, then we can change our course in here. And that's usually what I try to do here, is some sort of assumption we have out front, else it's very difficult to go. So once we have another new event, we will adjust along the way, and our VSA, trade VSA tools are able to detect and able to help you going forward in there, right? So hopefully, now last week, for those of you who joined us, I've talked about the rubber glove rises again with the surge in COVID cases. But more importantly, we saw one of the white swan, which is Riverstone. That's right. Now Riverstone started to move up, and I already said the green pentagon, which is on the healthcare sector, started to turn up. So it's really good that if you follow the sector that we talk about in here, and definitely you're able to make some early gain going into it. Now, we have talked about the chart here, which is updated on the 1617, that we saw this very mysterious, let's switch on layer, the front runner that caught my eye, and I started out. No doubt this week it started to turn back, but the other stock hasn't run up yet. As I was talking about this, eventually on Thursday, the stock actually ran. So did it run based on my assumption? But I do think that it's no surprises, because if you're able to read the price and the volume and use trade VSA 360 or at least Smart Robie are able to tag some of these. You can see definitely AP4, which is a Riverstone, continue to hit on its own. So usually this is the leader, and many of this what we call fellow market players will tend to follow the leader. And we have, like this week, you can see since the last Friday or since 16th of March, other gloves are simply moving higher. We got Top Glove, we got Hata, then we got STGT is Street Trunk, which is listed in the Thailand Stock Exchange. Kosan all started to move right now. Of course, you can check the green pentagon when it first appeared, so that will definitely put you at the right spot in here. Whereas AP4 has gone parabolic, right? Anything that's gone parabolic in here, you can see AP4 is undergoing a 6% correction in here. So that's why don't be fooled by stocks that is climbing higher, because smart money will use that as a pretense to distribute under high volume. Now, many of you would have known how to use the low volume accumulation, right? Which is what we teach in our masterclass and also in our next coming course that we have for you, for those of you who are interested to join our educational program in here. And of course, for the February 2022 update latest, major of the rubber glove was giving really bad news. You could see, right? Hata, second listed glove store, hit 259 million, which is down 72% quarter on quarter. We have Kosan also down 59% for 280 million. Supermax, one of the largest glove maker, fourth largest actually, have a profit after tax of 48 million, down 93%. So all these are quite expected. As I said before, many analysts, and you all know, we did have a super peak earnings due to the COVID and also the continuation of the COVID-19 founded by the Omicron variant in here. Riverstone, which is the one that you saw listed in SGX in here, hit much better of 110 profit after tax with 58% down. Comfort was at the loss, and then finally Top Glove, the largest listed company in Malaysia, had 186 million profit after tax excluding, and was down 69%. So all this now, that means no one want to touch it. But guess what? When there's bad news, the market, in this case the stock, goes higher. Smart money in play. You know it first through our Pentagon Guider. So no surprises if you've been following here. So that's usually what we seen. The bad news, it's time to be accumulating, because smart money doesn't want you to. They will probably do right what they did previously on all the energy stocks and all the plantation stocks. That's why it's always good to get in early by following the Pentagon Guider in here. Right, so let's take a look at what we have in pretense. Now, you've seen last year, this is the healthcare stock, and this was last week. We have a 20% drop when we first talk about the last update that we have on the rubber glove. ASP prices June to September was around 65 to 75 and continue to a downward trend. We are almost at the pre-COVID COVID, the ASP, the average selling price, which is around the 35 to 45 US dollar. This is what. So right now, the healthcare sector is adjusting to this new cost structure. Why? Because of higher inflation. We have seen oil prices has gone up, food prices has gone up, petrol, right? You have seen that also. Many other things in your daily necessity has gone up. So now we have to look beyond the rubber glove share right now, and definitely beyond, because ASC prices are going up. And no surprises, healthcare stock turned green Pentagon this week, just this week, on the 21st of March 2022. So check it out on the VSA 360 for that to see where it is likely to be heading in here. So with that in mind, all this, will the market rise higher in year 2022 after the Ukraine-Russian war ended? What do you think? Right now that I explained to you, because everything been priced in, smart money starting to accumulate. What do you think? Let me know and pencil those in there. I'd like to hear your opinion too. Will the market go higher on the second half of the year? What do you think? All right. Now let's look at this gentleman that we have in top of me here, President Vladimir Putin. Right. He's a guy that we all very fearful, right? Because now there's a talk about the end of the war with the nuclear. That's right. As Russian nuclear war intensified, some warn of a nuclear escalation is possible in here. And by all means, this today in the BBC, one of the Kremlin spokesmen said, if Russia is being attacked, and right now Ukraine taking back some territory from the Russian in here, because the Russian troops are not able to make many advances, so the Russians are retreating, but they continue to bomb in, but they might use their heavy artillery or their really hypersonic cruise missile, which is the one that you see on the picture in here. So that is what seems to be worrying in the market. But so far, the market has pretty much priced in what we're seeing, with the exception, in my opinion, I think, is the nuclear war. So what is the chance of a nuclear war in here? Now, a scan of the news media out there, as the Russian digs in, what's the risk of a nuclear war? Definitely it's not zero, which I do agree with this interpreter website in here. But finally, the US-Russian nuclear war, if they do have one, when the Russian start shooting to Ukraine, and then the American and the NATO start shooting in, that is the end game, in my opinion. Stock market doesn't matter anymore. Why? Because you will have, based on the nuclear war simulation here, 90 million people will die in the first 4 hours of a nuclear war. That's right. 90 million. Okay, that's a lot of people dying in here, right? Half of Europe be wiped out, and at that time I think the stock market will definitely take a big meal. But because there are heavy losses on both sides, right, including the Russian in here, right, but very likely that is a low chance. But I'm not saying that it won't, but there is a low chance in here. We have not seen a nuclear war, and I don't want to see one in my lifetime, and I don't think many of you want to. So right now the American is playing cool in here, still continue to put a lot of sanctions, including putting a lot on the Vladimir Putin's own oligarch, as well as some of the staff and family members in here. So let's look at the history now. Should no nuclear war, we are not reaching the end of the world. Let's look at history as well. Some of these I have posted much earlier based on a working paper, how do financial market think of war in Iraq, using that as a case. So if you look back, the US is really impacted because of the alliances that they have with the NATO and being a big brother in here. Whereas for Malaysia, right at the bottom in here, now Malaysia generally, we'll see when you have a war, commodity prices tend to shoot up a big heavy part of it. But Malaysia being a net exporter of crude oil, we actually benefit. So it almost, there is none impact to it. So I'm going to share with you in here so far the war that we've seen in here, and KLCI, like it or not, many parts of our market caps are actually priced in the energy oil and sector. So if you look towards the Dow Jones, the Dow Jones are the red one here. If you look back, going back into early March, Dow Jones actually experienced a downtrend, whereas the KLCI since last year November, our KLCI actually been heading up because of the energy sectors. So that's why I always say before, it's important that you pay attention to the sector, and one of the best way using our VSA 360. If you haven't got it yet, do subscribe to our VSA 360, and there is so much big benefits using the VSA 360 in here. So that's what we have. So now let's take a look at another chart here about the geopolitical events and the what we call the drawdown, the impact of the drawdown, how much it is. See, on average, whenever a war, we have a 5% drawdown in here, 5% drawdown, but there are two parts, okay? The first one is this column, what we call race to the bottom, okay? If you look back, the more severe one that I can think of, right, is the US terrorist attack. That one took 11 days to raise down. So usually it falls down much faster compared to what we have. And the longest one, let me just fix this for you. Just hang on a minute here. Okay, apparently, let me just change this to this pointer here. Okay, and hang on. All right, so you can see the invasion of the Kuwait that lasted about 71 days. That was a slow burn, right? And US actually went in way back in 1990 in there. So far the question is, can Russia afford a very prolonged war? Okay, that has always been that question here. So far, we are already in 1 month, almost 1 month into this war in here. We haven't seen the end of it. No doubt the President Zelensky is trying to make peace with the President Putin in here and try to talk it out. We have not seen the bottom yet, but the stock market has already made a bottom and continue to rise up. Now take note what I talk about the race to the bottom, which is on average, taking an average of 22 days right to the bottom and then recovery 47 days. So that is almost a 2.2 ratio, meaning it takes twice as long to recover than the race it is. So using this information, we try to extrapolate into the future where we are likely to be and build a scenario for you to look at this. So what we want to do is really look into this two-part series in here. So we will arrange it based on the date that we have so far. So we have the war started February 24, 2022. All right. Then we have the market bottoming. Actually, the market bottoms 12 days after the war started on February 24. That's what we said before. The race to the bottom, again, is very similar. So right now we could see this Russia and Ukraine war. It also follows the same playbook at what we've seen the last 20 wars that we have over the last 40, more than 70 years ago, okay? Then we have the market recover using the ratio of 2 to 1. We should have the market recover in 24 days because the race was 12 days. And remember, this 24 is 24 trading days. So if you take a look at it, you extrapolate February 24th was the date. And the market hit bottom on the 8th. Right now is 23rd. And May 2nd. So that's the month we are recovering in here. The 2nd of May. Now, how true is it? Don't take me for telling you this, but I'm just trying to have some sort of a guesstimate to when this market will be recovering in here. Maybe it may be a bit later, June and so on. But let's take a look at it right now to have some sort of a playbook that you can use to build your scenario and plan ahead, right? It's always good to have some sort of plan. Now, let's use this to predict the US Dow Jones to test back at least the 36,000 in early May 2022. Now, fact number one, we have the market bottoming on the 8th of March. The peak value already stretched. You can see this peak value, which is one of our trade VSA portfolio indicator in here, has hit about 8% in here. The last round that it went up by 8%, it fell by 10%, exactly 10% in here, and now hit. So I'm saying right now it stretches a bit really. So expect some correction going in the next 2 to 3 days in here. So what you want to do is look for some good setup in here and sector rotation right now. You can see the market already turned green pentagon 1, 2, 3, 4, 5, 6 days already in here. So market corrections is in here. But we are likely likely to see the retesting very soon tonight as the market just opened to test the 35,000 level in here, and I don't think the market should close any higher. A good correction for the next 2 to 3 days is definitely good. Look for a good setup in here, something that we shared from our coaches Zach and myself in here. Then you're able to win. But more importantly is the sector. So what are a few things you can do to prepare for this market recovery? Let's check it out, okay? Number one, be ready with the capital you can spare, all right? Because we do not know when this war is going to be continued or what. Use some sort of cash you can spare. So know which sector and share to buy, all right? Don't be many of the so-called public. When the market start to rise very high, only they ask. All right, so that's where they resort to tips, and usually if you buy on tips and being not prepared, you are likely to lose money in here. Because you want to do some bottom fishing, use our trade VSA screener to do bottom fishing in here. Definitely, I think our coach Arif has shared that. And then do cut loss on some of the dead wood shares. Dead wood means they're not moving despite, we have seen some of the other sectors know who they are. Now, if you have some dead wood shares, one of the first characteristic is that they just move sideways and continue to go downwards in here, all right? Despite how the sector has moved up, check out which sector the stock that you have. If it doesn't move, it is a dead wood stocks, okay? Cut loss on that one. Then get into good quality shares, okay? Not just purely trading, get into good quality. If you think the war will prolong longer than what we just described there, then at least that kind of company that can grow because the demands for their product is there. Those are the ones. And or prepare a watch list like Smart Robie watches. Use our Smart Robie apps in here and put it in there. When the market turn green pentagon, you'll be informed using the watch list. And continue to stay sharp as a trader, investor. Get tools like the VSA 360 in here, and also join our program. And that's what we want to bring you. This program in here, how you can turn this crisis Russia-Ukraine in here. So we'll be doing on the 13th and 14th a 2-day mini workshop where you can use our VSA 360 for a very affordable price. You get our 30 days recording and the training, so you can find the next multi-bagger that can yield at least 100% return in here with our plug-in 30 days recording video and access to a lot of our research and also to our coaches and ourselves here. So make sure you get hold of this. Now also we continue to upgrade our YouTube channel in here with new content. So we are coming up with top dividend and growth stock for 2022. So make sure you check it out in here. There will be a first tip here. Subscribe to our YouTube channel and be informed of new video updated weekly in here. Watch the new content video, US stock dividend for 2022, and this will give you a US playbook watch list. You can put it into Smart Robie here, and it will be under our playlist video at a glance. And that's the on this side. Sorry, this side you can find the QR code for that top dividend US stock for 2022. Okay, and tip number 2, we're going to go down to tip number 2. Now, there's a lot of talk about interest rate being rise, so I want to address this for year 2022 in here. So you can see every time we're going back a little bit of history, going back to the mid 2000, where interest rate goes up, stock market continue to go up. Because why, right? Each time interest rate goes up, but you need to have a period of steady or rates return. Okay, the steady rates, this is how the rates, we are in the 1.25 now. It will likely to continue to go into at least maybe targeting 2.5% in here. Not so much going up to the previously in the past that it gone up to about 5%. So stock market will continue to go up. Now also more importantly is what we call the stronger economic activity. Why do they raise interest rate? Because the economy is overheating. Is to prevent people from buying too many things. We know all prices has gone up, right? Because people are consuming more. So if you tone down that activity of overbuying or overspending, overworking by higher interest rate, because it will disincentivize people from spending more, then you will bring the rates lower, and then you have the economy more in control in here. Now take note, rising rate will not stall or collapse the stock market as we've seen in the past in here, but especially the technology sectors in here. Previously we talked about having a higher interest rate that will definitely detrimental to the tech stocks because they are not able to grow. That's what now even the technology, there are two parts. They are what we call the disruptive technology, and we have the consumer technology. Consumer technology are things that you and me know of, semiconductors, the consumer like the Apple, the Microsoft, those continue to do well, but the destructive technology like the those like the Alibaba, which today kind of like telemedicines, cybersecurities, right? Those are really been taking a hit in here. So this also shows you economic activity has a lot of prolonged effect to the interest rate movement. So if you look at the next chart that I have on top of me here in here, on average over the past since 1975, when there's a change in the 10-year treasury yield, right now the 10-year treasury yield is around 2.5%, 2.3, 2.5% in here, and you have the annual period of rising S&P. So last round we have 2.7. You have the period of S&P rising to about 2.8%. If you change up higher, you can see a 2.2. Depending on the time, that will be a rise of 32% in here. Another 2.51%. So 2 to 3%. Okay, we have seen in here. But taking an average in here about 12%. So if history has any doubt, I think the S&P can rise over this period in here for the next 2 to 3% more from what we see in S&P. Not much, and hopefully we will continue to have the dovish remark from the US FOMC. All this is going to depend to what we have seen likely in the Russian and Ukraine, where the uptake activity economy will be higher, and then you have more likelihood of the market to going higher. So tip number 3 is the most watched indicator for recession. Now we always talk about recession, right? Usually recession comes and recession goes. So the gray shaded area is this one in here. And what we are talking about in here is the yield spread between the 10-year and the 2-year yield must, as I said before, go to negative first before the start of the recession, usually in 1 to 1.5 years. So you can see here, it touches a zero, then you get recession between 1.5 to 2 years. So even as we have it here, this market have to touch it, meaning the longer term yield is shorter than the short-term rate. That means people do not want to keep cash in longer term. Now you remember, right, your fixed deposit, usually if you have 1 month and 2 months, right, usually the interest rate is lower, right, compared to have it for 36 months. And that's the same thing, because we come to a point here where the short-term rates are higher and people don't want to have any incentive to put their money in the bank. So that's where you have this negative yield spread, because the longer terms are longer than the shorter terms. Okay, sorry, the longer terms are shorter than the shorter terms. Okay, so we watch for the spread to move to negative territory, which is not yet. So that's why if people talk about recession, just put it out aside here. And I think most likely if we do have a recession, it will be after the 2024 US election. That's where it's another story, another candidate, whether we have the Republican or whether Joe Biden is running for that one. Now, the tip number 4 in here is the foreign funds continue to dominate in our KLSE. Okay, so that means our KLCI market could not fall any much lower than we've seen, at least to the 1560, 1580 level. We are testing the 1600 level right now. So our KLCI market outlook for next week, having said that, right, the market has turned green Pentagon last week, and that's first, many of you would have known that as I update on our breakfast show in here. Then we have the KLCI look to retest back the old high in the 1620 level. Okay, for the third time, and watch out, third time can be very, very lucky. Very, very lucky this time. Okay, so moving beyond the 1620 resistance depend on our crude oil prices. If we can break above 1620, that will simply be a matter of the oil prices, because remember, our KLCI is pegged towards the oil prices since November last year in India. Foreign fund will still be net buyers, so that provides some sort of support since May 2024. And the first thing you will see that also on the VSA 360 in here. And the market stages trade VSA plugin indicating double bottom trade setup. You can see here, this is what I mean, the double bottom in here, and that's why we are looking at bullish days ahead of our market. So for quick summary in here, always wait for the green pentagon, right? And next you want to wait for the volume confirmation here. Make sure volume comes in and retest the breakout to reduce risk. This is about the 1620, the 35k, which I've talked about, the 35,000 for the Dow Jones, 4,500 for the S&P 500, 1620 for the KLCI in here. Wait for that breakout first and always trade with the trend. Don't be greedy, right? Do stick to the market leader in here and trade with a trading plan where if the market doesn't turn, right, you need to do some evasive action in here, whether to cut loss, take quick profits in here, and more importantly, finally, is to control your emotion, right? That's why I always talk about, always start off with capital that you can spare for that matter. Okay, now let's look at the VSA 360 dashboard for the sector outlook. We're going to open up the 360. We want to compare the US sector and the KL sector with special preferences looking into technology sector, construction, finance, and energy. So this is where we use the 360 here. Okay, and first lock in here. So we open up this level in 360. So right now you can see a percentage from Pentagon, right? We have seen they do follow the US market. Let's take a look in here. Healthcare has turned green Pentagon. You can see, right? This is where we talk about in here. Last week, I put this chart in here and it has turned green Pentagon. Now the matter is breaking above the 2 moving average. Now remember, no doubt the trend is still railway track down. We wanted to railway track turn back up. It hasn't done yet because the overall market is still on a downtrend in here. Let's look at the next one we talked about was construction, which actually turned green Pentagon. This is nice. You can see market started to turn back up again, and that's what we want to see also for the technology and the healthcare construction. Looking at finance in here, and we can see the finance also. See, finance has been what we call the railway track. You can see these 2 railway track is trending up, and this is where we see this big move up here. Now, will we see technology if the Russian and Ukraine war were to end and pick up? Then likely from May onwards, end April, May onwards, we will see this market continue to go up. That's my hope for almost thing to come, looking at the dates that we've seen so far. And the other one is the energy sectors. Quickly looking at it, you can see energy sector continue to fall down in here, but I think it do have some sort of support. So this is why I'm starting to pay notice to energy sectors, because we have the overall US market started to move up, now going through correction in here. So energy is going to pick up. Energy do pick up, our KLCI will pick up too. Right now we can see our KLCI turn green Pentagon in here. Definitely will be updated with the 23rd March chart in here, retesting back the just short of 1600 today here. 1620 is this level in here. Now I want to draw your attention to the next one is the US sector under screener. And you go right at the bottom in here. Now, this system, the VSA 360 FA, is a dashboard that is created by Trade VSA. You cannot get it somewhere anywhere else. You can get it from us. And just go on to the US sector in here. Again, just bring this up here. And you can see, double click it here. And you can see all the US sector already turned green. Now this is updated every day. So just imagine you have this every day. You can monitor those sectors and see when a Malaysian turns. So why I say that is because you always have to do sector rotation, because these are where the market leader is, because they follow Abang, right? The Abang is the US stocks. So right now, if you look from here, we want to look at the most recent turn green Pentagon. So we sort it out by duration. 5 days is XP Biotech, consumer, semiconductor just turned, right, which was 6 days ago. So you can see this semiconductor just very nicely done, and that's why I'm looking to look at X. So you can go to XSD ETF S&P 500 in here, and you can see this is a nice pullback in here from right at the bottom, almost a 17%. But if you have done so, you could have gone in about 197. Now it gone up to 210. So this is a nice pullback in here. Market certainly is turning, right? We are the double bottom in here. So that sort of gives us a perspective on the sector. Let's look at also the energy sectors. Where is the energy sectors right now? Energy sector is red pentagon, same like Malaysia, red pentagon, EXF. You can see that's a pullback, but the trend, you look at this trend. Now you compare that with the KLSE sector. Okay, let's go on to let's turn this off, and you can open up and compare the energy sectors. You can see energy sector is downtrend, US one is still on the uptrend. So at one point in time, I think the energy is going to pull back. So wait for those kind of trend up, because the big brother, the Taiko, is the US market in here. And that's how we actually use to trade those patterns and based on the sector. And a very simplistic way, of course, we will teach you more in our classes, program classes. Also financial, XLF, you can see right now is already turning up, very similar to the overall S&P 500. You can see S&P 500, that's right, the finance follow the S&P 500. So that's a very quick snapshot of how we look at these sector in here. So when the US sector turn green pentagon, that's the one I usually look at. When it just turn green pentagon, that's the one I'll be really, really interested in, because we will see the sectors from the US will in turn influence the KLCI sector in here. So you can have those two, you can really compare and see the after effect in here. So that gives you a basis, that you don't invest buta. All this for a low price of less than 2 ringgit per day per market. So subscribe to our Trade VSA for our package. We also have our master class package in here, but I want to invite you to our the mini course on the April 13-14, which is the finding the multi-bagger deep value investing, which is one of the many workshops that we're doing absolutely free for you if you join our VSA 360 mini course in here. Now on the 16th of March, I talked about, we wrote an article and put it up into i3 Investor, and of course, not many people pay attention to technology, but we bring it out here just last week. Is it time to do bottom fishing on Inari and the technology sector? That was even before the Inari turned green pentagon. We know, because why? We know how to follow the smart money. We follow the footprint of the smart money in here. Look at the low volume in here. We see accumulation, and that's why we are able to put this way back in here. But more importantly, just want to talk about the opportunity that we see on technology and also semiconductors in here, which was previously overvalued, but now is reduced to more reasonable valuation. Now remember, Warren Buffett always say, be greedy when others are fearful. So it's really a good time to be picking on that too. So if you look at it from a weekly standpoint, okay, weekly standpoint going back to 2020, we have Inari hitting a high of just short of 4 ringgit 40 cents, and there was a big pullback. And this pullback, as I said before, oversold where we are almost at 40% on a weekly basis out front in here. So what do you think? Now this is where we are right now in here. This is what we call the trading view projection, just more like an artwork projection. And my point is the 5G growth. If you read that article that we have on i3 Investor, go over there and rig it up, right? You will be aware of the opportunity that Inari has. No doubt, on the weekly chart, it hasn't turned green pentagon yet, but you don't wait for green pentagon, right? But on the daily, it has turned green pentagon already. And the potential of the 5G growth that gives you a good upside, at least here from here, what, a 47% upside to fall? Maybe not 47% lah. Maybe let's think about maybe 20 to 30%. Very, very good today. All right. If you're thinking more of a long, and also no doubt you want to wait, all right, on the market stages to turn green here. It hasn't turned green pentagon yet. By the time it turns green pentagon, it'll be too late. So keep an eye on Inari. You heard it first on our Trade VSA in here. All right. So let's move on to our next. But I also want to draw your attention to some discussion that we talk about in here are the key risks, especially when it comes to Inari. Now, Inari has two big customer in here, customer A and customer B. Okay, customer A is Broadcom, we are assuming here, because it gives almost 1 billion, 1.2 billion business. We all know, previously I talked about the CEO, Tan Hock okay, which is actually a friend of KC Lau, and it goes back a long way. They used to be a colleague in here. KC Lau is the CEO of Inari, and that's why I have confidence on this thing here. Is there was a news about Broadcom wanted to sell the radio frequency, and immediately the Inari took a tank because of the 5G smartphone, but eventually Broadcom kept the business back together with the Inari in here, and Apple was projected to pay 15 billion because of the 5G going into 2023. So that will definitely benefit Inari. So on that pretense, I think the supply chain has already been established for Inari. So it just matter for that, stocks that we've seen able to go back up on the 5G. Again, all these things are keep in mind in here. We look at the probability of it and how likely it's going to return back to the chart. Okay, so what we have done right now is to put Inari to diversify here, but we want to put in as a core shares. Okay, so we are introducing the portfolio Smart Robie, and we have one already since January 22. It's also in our VSA 360 in here. It's suitable for growth portfolio and aggressive investor, but you can start out small. Okay, start out small, but you can also use it as a case study if you want to grow stocks in the technology center, but the focus is on our KLSE market only. And join our program to learn more. That's the one I'm talking about in here. So what we have since January 2022, the market has pulled back a bit. We have Inari. So I said before, this is the VSA 360 in here. We have Guangzhong, all right, and we have DNO, and we have KGB. Right, so far they're coming back for a portfolio of 20,000 ringgit, just of 4 shares. Right now we are down 4%, but I think based on what I've talked about, the Russian-Ukraine war, this is actually a really good time to be buying and having this portfolio that can help you to earn a very decent return in here. Okay, so what happens if you are not sure about the war and you say, Martin, no doubt what you've just said is quite good, but I really have doubt about how the market is going to be, can I just stay out from the longer term investing because you're talking about weekly charts, we're holding for a long time. Can I stay away? What are my options? Tonight I have a special option for you. So let me just introducing our Pentagon guided trading portfolio. That's the one I've been showcasing in our breakfast show, because this system will teach you to stay out when the market is bearish and inside a trade when the market is bullish. So we generally use Pentagon as our entry. We have profit, we have target profit, we have stop loss, and we have a period of expiration. If the trade doesn't work out, we want to be out, and usually it's about 30 to 60 days. And because we have a fixed rules, we use a trade. So it's like basically it's like a croupier in the blackjack. You strictly follow the rules. When you do, so you don't have to put your emotion. When the trade comes, just do it, and you have a profit objective. That's all you do, right? Just like you're trained to follow steps. And if you put in the right amount that you are able to spare physically, your feeling or emotion can be much well controlled, because you know how much you're going to be losing and how much you're likely to make, which I'm going to share with you some of our back tested results. It works very well for the KLSE and US market, SGX, with little rules variation. Okay, now the Pentagon Guider has a positive expectation value. The longer that you trade, the better it is, and we have tested over a period of 5 years. So what it does is that you use the fixed rules. We use the trading plan, and it works for 4 markets in here. So no second guessing, just follow the system in here. Now our back testing result in here are done by our team in here. So going back to 2017 to 2024, 2017 we have a 24% return, 2018 50% return, 2019 106% return, 2020 a 75% return, 2021 we have a 16% return, and our average of 54.5%. So it's worthy to really back test it. Now don't take our word for it. You need to back test and convince yourself that this system worked over a period of 5 years. Right this year, 2022, right 2021, we were using the real money in here. We didn't get up to 60%, but very close to in here. And 2022, we are starting out in here to follow that trading plan as close as possible, using the same trading plan to move forward in here. Now, I always talk about this, and you can check it out on our investing.com episode 168 in here. What are the returns compared to a KLCI? We are still beating the KLCI in here. And these are the trades that we are currently in now. Using real money, we are in on Elsoft, Evergreen, and Gambunda. And we will look at the trade charts that we talk about in here. Those are still following the green pentagon that we have. No second guessing. We use the system to come out with those trade order, and we do it. Right now, we are still running our Gambunda, and hopefully to hit our profit target at 360 in here. So let's see whether it will get there or not if the market were to Evergreen started to pull back today in here. Elsoft started to move up. So let's see how this trade's going to be panned out in. And what we do is simply just back testing the year 2021 and using real money in 2022. All right. So the rules are very simple, right? When you want to be in and when you want to be out. So when you see the blue zone that you see up here, these are the blue zone. Okay, these are the blue zone, right? That's where you have the green pentagon. You want to be inside a trade. And when it's orange, you want to stay out. So those are very simple, intelligent trading rule that tells you when you want to be in and when out. So as a consequence, you back test it and it goes through this trade, and you can see we have a profit, how long the holding period. We use $50,000 as a back testing in here. Each trade allocation is about 12,500, only 4 trades. All right, so those are the rules. Just want to share with you in here. And you have opening, balancing trade. And what we do is just we go back to the 25th of March, right? And we pick stocks, follow a color-coded scheme in here. Very simple to pick the stocks going back to 25th of March. That was our MBMB for that trade, and the result will be here. You go in on the 25th, and then when you break through the ATR stop loss, you cut. This is one of the trades that didn't work. Of course, there are other trades that work. Let me just share with you in here. These are some of the trades that work going back to episode 132, which was last year, October. You can see we are in Pastec. There was a 14%, TN Logistics, Hyptech, a 5% or 393 ringgit return. Then on the mid-October, Inari, Pastec, and Logistic in here. So if you look at this and you're able to build equity curve from the $50,000, because we use real money, we stick to 31,000 because that was the available fund that we have. But I think this year we'll top it up, and by October it hit up to 12% return in here. You could see some of these stocks that we strictly follow the rules and also the costs. Okay, so the portfolio has up and down, right? We have fixed rules in here, no second guessing, and that's how we are able to get the emotion out, and it's just automatically so easy to trade in here. Now, using the real money portfolio, and we try to simulate 4 trades per month. You can see we were in on the 3rd of May, and we're out by 3rd of May. Okay, holding within 30 to 60 days. So you can see usually when the trade over, when we take the money out from the trade that we close and rotate into a new position. So it's like riding a new horse every time, like what we call the Pony Express, which is the talk I've done previously before. So that way you're able to build a portfolio that's continuing to rotate in and rotate out. When the market is bad, you stay out. All right, you have a shorter profit target, and if you hit it, you take it. All right. So if you look back in 2022, we started off on paper trading, this one in here, 50,000. On December, we are about 58,000. End of December is about 58,000. We pick up again on the January, February, and March. So it has ups and downs in here. For 2017, you could see 50,000, 62, a 24% return. Back testing 2018, a 50.6% return. And 2019, 106.8% return. And of course, 2020 was a 75% return. That was a year where we picked a lot of tech stocks and also the Harta Lega stocks, and we were able to exit in here. This is the more recent one, which is the 2021, the 16% return. So all in all, you could see our backtesting result works in here, and that's why we are very confident. If you do not like to invest in the long term, we have a trading portfolio strategy in here, which you can follow it, or if you want, you can use the portfolio investing for a longer term. There is a distinction between the investing theme and also the trading theme. Whichever suits you, both works in different scenario of the market. One designed to stay out of the market if the market is bad. The other one continue to buy or going in, averaging lower if the market was to go down in here. Whichever suits you in here. So our Pentagon trading portfolio, in short, it's like a recipe, just like making this cake. We got fixed rules. You leave your emotion. It works well for the KLSE, US market, and SGX market in here, giving you exposure. And that's precisely what we did to train our turtle trader. Those of you know, in the 2 weeks ago, we have our winner, first Malaysia turtle trader, winner Roslyn Tay, and now we actually teach them to follow a recipe, and subsequently she did pretty well with the others, first runner-up and second runner, Eric and also Zenali, and she made about 21% in 2 months. All right, and that's the kind of confidence that we have in our students, training them to be really a turtle trader. And I think with the trading portfolio, which runs a longer period, because this is only for 2 months, the trading portfolio runs for 12 months, and you can backtest over the period of 4 to 5 years. We always think in long term, because if you're long term, you're able to double your money. Remember, we talk about previously making your first million. Now, just in 5 years, if you have an average return of 56%, I think you can get there much faster than anything else. So with that, an opportunity arises for the April 13 and 14, turning crisis into opportunity. Find your next multi-bagger. You can register for this course. It's a deep value investing course. There's a number below. You can find out more. And I'm coming to the end of my talk in here, so you can also join our Telegram chat room for all free stock market information in here. We really want to bring our voice out for those of you who really want a system that can help you to make money consistently year in and year out, just like what we did over the backtesting year 2017 all the way to 2021 in here. Okay, so thank you for coming tonight, and we'll open up for some questions in here. Don't forget to go over to our Google review and give us a feedback and let us know what do you think of us and how we can improve our services and education to you, so you will reap the benefit from the stock market and some of the observation that we made after the Russian and Ukraine war in here. Okay, I'm open for some question in here. So making money takes a little bit of effort, a little bit of time, and a little bit of investment to upgrade your skill and your know-how. I think that's very important too, right? We never shy away from that one. Okay, if there's no more question, I thank you for coming tonight. If you do have it pencil in there, that's the number you can contact us, 010-266, should you want interested in our April 13 and 14, right, of our Pentagon Guider, may it be the Robie Smart Portfolio, or even our deep value, finding the next multi-bagger. Thank you. Bye-bye.